Hi, it's Friday, October 14th, end of another miserable week for the markets. Not much to talk about tonight, so this will go fairly quickly. Today's action completely undid the little bit of positive that we had yesterday, so we're back into a completely red risk model. So enough said there. The small caps and mid caps both down about 2.5%. Q's down 3. Spiders down a little over 2.25%, and Toronto is down 1.5%. This is how we close. This is the weekly chart. So this is this week's bar. So red from start to finish. And remember these lines I drew a couple of weeks ago seems to be playing out, but we're nearing the pre-COVID highs right here at around just under 340. And so I'm really expecting a bounce back up in here, which I'll show a little more clearly on the daily chart. So this seems to be holding out pretty much as I expected it. Get that out of the way and go to the daily. So here's the daily. And the way I see this, I think I drew this out yesterday. We had yesterday's action where we had gap down and then ripped right back up again. It's very similar to what happened in January. Well, it happened 3 times actually. It happened here in January, it happened here in February, and it happened here again in May. For the latter two, they kept on going for a couple of days, so there was some follow through. No such luck in January. It basically stayed inside, mushed around in here, and then took about 3 days to go back up. So that's kind of what I'm hoping for this go round. Let me just spread this out a bit. The way I see this, what I'd like to see happen is this bar is a little deeper than I really had wanted today. But not surprising. So next, what I'd like to see is this stay inside here for a couple of days. Maybe take out these lows and then rip. I'll draw it in here, but really, and then rip right back up again. So we could have a buying opportunity, a tradable rally that will take us at least up to here, which is about a 6% move, I think, and perhaps even up to the 200, which would be more of a move. If we just go across here a little bit, if we take, see, we're getting very extended from the 200-day moving average. And when this happens, when this delta gets so big, there is a bit of a reversion to the mean. So this move here from this low was about 16%. And then it climbed back up to the 200. We currently are from here to, as of yesterday's low, we were down about 15%, and where we closed today, we're down 13% from the 200. So that's potentially how big this rally could go, which would be kind of cool. The way I would play it is if it does work out like this, pardon me, I would be buying a 2 times leveraged S&P instrument or a 2 times QQQs, and if the market indeed goes up 6%, that position would go up double that to 12%, which would be a decent return. So that's just sort of how I see it. On my actual positions, I bailed on my Twinkie. It shouldn't have done this. I mean, this move here completely undid everything from yesterday. So in light of that, I just bailed. I will look to re-enter because this still looks reasonably a reasonably good pattern. But rather than let it go all the way back to my break even, which is just around 24 bucks, I took the cash and rang the register. Nothing new on HROW. It's still looking really nice. hopefully this will continue to base, tighten up a little bit and then whoosh up that way, as opposed to going that way. TNA, which is a good trade from yesterday, is now within 20 cents of my stop, which my entry was 29.10. We closed today at 29.30. That's a little nerve-wracking because if we'd closed higher in the range, I would have a good cushion in case we had a gap down on Monday morning. But now it's very close to my entry point, and a gap down could mean I'm going to lose a bit, although I pocketed enough on, I pocketed another quarter up here at 32.10, I think it was. Yeah, 32.10. So I've got pocketed a good gain, so I won't lose the whole thing, but I hate to lose any part of that. I did enter 2 new positions. They're looking, these are primarily because of the fundamentals. And the chart pattern is really holding up well. Here, if you look, if we see what the S&P has been doing throughout this period, and this one has been going this way. So it's showing good relative strength. And on an earnings basis, just bring up my MarketSmith here. Go to the weekly chart. See, it's climbed from here, got a nice base, and it's positioned now to go higher. Obviously, if it rolls over, I got a very tight stop, so it doesn't really matter if it rolls over. But you can see the, get my mug out of the way. Great sales growth, consistent for the last 2 years. A little blip in earnings in the March quarter. Don't know what happened there, but good earnings, up 60%, 59%, 31%, up 44%. So that's got that going for it. Estimated earnings for next year up another 12%. I'm not saying the world on fire, but still pretty decent fundamentals. And then I also took a small position in LPLA, which is a very similar story again, with the S&P going to like this. This one is holding on and actually is rising. This is a bank. Normally this pattern, I would wait for it to break. It did break today and then pulled back. Essentially, I entered this because my mentor, Mark Minervini, entered it at around here at 244, 245 on the pullback. And it's actually pulled back quite a bit deeper than that he expected. And the same with myself, but a stop is down here at 232. So good chance this may stop out on Monday or Tuesday, but it's a pretty small position. So that's it. I'm still working on a significant tutorial on what to buy, when to buy, how to find them, and then most importantly, position sizing and risk management. So we'll spend some more time on the weekend, and hopefully I can get it done this weekend and get it out to you. So stay safe out there, and talk to you soon.